All right, today's the FOMC announcement. I'm going to be using for today only, my FOMC 250 strategy. All right, we expect the market to be choppy, and we use the 250 tick for trend line breaks. And you can see right here how it works on the 250 tick. First of all, here's the 5,000 tick chart. You can use any time chart you want. The tick charts work good for this strategy. Here's the 10,000 tick. You can see how sideways it is. All right. 2,000 tick. You look for the range on the FOMC announcement day, and you just keep looking at that you want to see a nice solid pattern like that. And then you go down to the 250 tick chart, and almost in that, if it's ranging properly on the FOMC day, where the likelihood of a big move is very, very small, we are using this particular strategy to take 1-to-1 returns, sometimes 2-to-1 returns, small base hits all the way through, and keep on doing that each time. Okay, so that's what I've been doing today, and I think it's going to be my strategy for just that particular day. I don't think I want to try to trade this strategy all the time, but on a day when you've got a lot of probability that it's just going to stay in a range, then this strategy is really, really good. For instance, we're going to look for a trade here with this trend line break right here, and if it works, we're going to jump in it right now.
Filled.
Now, if it breaks the bottom, you get out. Oh, it just broke the bottom right there a little bit. It's still bouncing off that trend line though. Got our sell at the target at the top, or you could just take profits.
Order filled.
You could just take profits anywhere you want. Just for demonstration purposes, I just want to show you how it works. Once it breaks the trend line, technically we would have been out right here. So it depends on your taste for risk. It bounced off the trend line, so it wasn't that, I like this. Actually, it's the best entrance when it bounces off the trend line. But depending on your risk, you can do a certain amount of dollar value for your stop loss. You can do a certain amount of ticks, certain amount of points, or you can manually do it, eyeball it. Just it happens so quick right here that it didn't. If I didn't have it automatically put in, my stop automatically put in, which I don't on this, and that's the reason why, is because it can whip down so quick and come right back up. It'll stop you right out. All right. So depending on how you want to handle your stop losses, but the trend line breaks are pretty reliable on a day like today. So we got on right here, got the trend line break, got out up here, and it's just a scalping technique, guys. It's not for a home run. We're not trying to ride this all the way back to the top or anything. If you take base hits like that all the way through, and every time it does a trend line break, I think it's a reasonable strategy for the FOMC announcement day. That's really the only day that I trade like this. So, all right, we'll see you on the next video. Lord willing. Peace.